Our favorite segment, our favorite part of Stock Watch Sunday is the top 5 stocks of the week, where we bring to you 5 stocks that are going to be on Brad's watch list. This is a watch list, not a buy list. I always got to remind you fools. Listen, it's just a watch list. But Brad, I asked Brad to bring some stocks to the table that may have some catalysts coming up, maybe moving, and why he's watching these stocks. So Brad, let's get right into it.
Yeah, so just there's a general theme to these stocks with the exception of one. And most of them have to do with the news from the Merck news that came out, and also we're seeing COVID cases kind of drop off a cliff, especially when it comes to the Delta variant. We are seeing it kind of like work its way into some of the pockets that it has yet to kind of like really visit, so to speak.
Yeah.
But all the places that we saw it kind of show up first, the cases are really just kind of rolling over big time. So this is really encouraging for a lot of those epicenter type stocks, the reopening plays, and then obviously also energy. Fatman Zoom, I think that like the travel demand for the holiday season. I mean, we've canceled Christmas 2 years in a row, essentially.
Yeah.
And I mean, I think between Thanksgiving, Christmas, and New Year's, I think that travel is just going to be insane. So that brings me to my first stock, which is going to be Southwest. Now, Southwest Airlines is something that I actually got calls in on myself. So full disclosure, for those of you guys who are in the Chaos crew, you know that I got calls that expire in December. But I think that this is going to be a potentially good week for Southwest. Now, you could take a look at some of the other airlines as well, because I think that they're all going to move on this news and just the positive sentiment here. But Southwest is best in class. They have the best break-even load factor. They have the best balance sheets. They burn through the least amount of cash. And so I like them from a domestic side of things. Obviously, Delta Airlines and United are probably going to continue to do well as we bring down some of the restrictions on international travel. But this is very crucial to me personally, because this is broken right back up over the 200-day moving average and closed above that. Fatman Zoom around $54 a share. And I think that this could carry this up. Investors might like the fact that this is moving up over the 200-day, and obviously there's some more positive sentiment because of potential travel demand.
Yeah, it's looking good. And sort of on a side note, you had mentioned cruise liners actually seem to be doing well.
Yeah.
I'm in Delta. I love. So obviously that's one of those stocks that, we've been on for a long time. So that's a good look. And I mean, we've been in airports recently, and it's just crazy. It's crazy.
Yeah. And that's not during like a holiday season.
Did you say you missed 2 Christmases in a row?
Yeah.
Oh, you did?
Two Christmases got canceled. Yeah.
Damn.
Essentially.
Okay. What do we got next?
So the next one for me is going to be Exxon Mobil. Now, Exxon Mobil. So I don't know what my mind was like. A little brain fart. So Exxon, I think, is going to continue to roll too. We've talked about energy stocks being the ones to own. Energy stocks take up 3% of the S&P 500, which means that there's a lot of room for these to continue to run if people start buying into the idea that oil is not going anywhere, and that's actually going to more than likely go up. We have the OPEC meeting that's going to be held tomorrow. Looking like that they might increase production 400,000 to 600,000 barrels per month. If that ends up happening, we could see some volatility in energy, but the demand is just so high that it might not even matter. If they go beyond the 600K, then maybe we could see some volatility there. But overall, I think just owning energy in particular, Exxon's going to be good because it has a high dividend yield. You can go after Chevron, some of the other ones. We talked about MRO, Marathon Oil, which you're in.
Yep.
I personally am in the oil services group, so it's OIH ETF. Literally, just pick your favorite energy stock, and I think that you'll be okay. But if we look at the Exxon chart, I think that this is something that you may want to take a look at because it's well above the 250-day moving averages, but it's approaching a resistance up here at around 61. It closed on Friday at $60.93, got up to $60.98 in after hours trading. If we open up above that tomorrow, which it's looking like we might, oil futures right now are holding quite well. I think that we could potentially see a breakout on oil, and in particular, Exxon Mobil stock looks really good here.
Yeah, that dividend is really attractive, and we have it in. We have oil in our dividend bot, so that's one definitely that incentivizes me to consider it. And it's almost like it almost creates a floor in a way, just because of the yield. I mean, you think about 5% is really awesome for a dividend.
Yeah, it's really, really good. My next one is going to be MGM. The casinos went off on Friday. Caesars has been leading the way, which is actually kind of surprising. I don't know why some of these other ones have been lagging, but I would imagine that they end up catching up. Caesars does spend a lot of money, and they said they were spending $1 billion in marketing on sports betting this year, coming up for 2022. So that's a lot. And I think that when we look at obviously Penn National, that hardly spends any on marketing because they don't need to, which is another plus for them. MGM is another one where they are spending money, but they're taking up market share at a pretty decent clip. This is the official sports betting platform for the Ravens. Obviously, DraftKings is for the entire NFL, but MGM's working their way in a lot. So we look at the chart here, and it actually looks pretty amazing. I think we're going to continue to see a potential breakout here. I don't know why this does this. We're going to go back to picture-in-picture here. I think that we could see a pretty nice breakout if we get up above $46 a share. 46.07 is what it hit last week before it had a pretty decent correction. And MGM, not just the sports betting side, but obviously the casino side too, is going to continue to do well. They have exposure to Macau, which I'm sure it will end up working itself out. So there's lots of upside here for MGM and really the casinos in general.
Yeah. Penn had a monster day on Friday.
It was awesome.
Yeah.
It was awesome. For somebody who has a shit ton of it, I was having a hell of a day.
I know. And I'm in the wheel strategy on Penn. So I had a call, or I sold a call at $78.
Yeah.
And at Friday, if it didn't come right to $78, which was ironic because it had been so low all week, that was a really promising move for it. MGM, a Fat Man Zoom special. And the Macau thing, the thing with MGM that I need to remind people, and we've talked about this, MGM doesn't need to win this online sports betting race.
Yeah.
Two things. They need to be top 3. Top 2 would be ideal. I think they're going for top 2. But I think what's more important is they just need to be the number one brick and mortar that has online sports betting. And it seems to me that all signs point to that being the case. I think really it's a 2-horse race, in my opinion, between Penn and MGM. I wish I remembered it offhand, but damn, you don't remember that area in Japan that was like the new Macau that I brought up?
No, I don't, but I found that.
Anyways, for those of you who got the watch list on Friday, I believe I mentioned they're already hedging their bets against Macau.
Yeah.
It's not enough to matter. They're doing everything right. I love MGM.
If you don't want anything that has exposure to Macau, then definitely take a look at Penn, Caesars. Penn had an 8.5% day and then went up another 0.5% after hours on Friday. Just unbelievable day. If you're interested in Penn, I like it if we can get this back up above $80 a share. The next one that I have on the watch list is Airbnb. And
that guy.
What guy?
Recently viewed.
Oh, well, that's
click it.
Yeah, and go to my top 5.
Yeah,
that's what you want to see.
Oh, I thought. Yeah,
I got you.
It's nice because it also gives people excited about they're like, oh, I'm going to wait around for Apple.
Except I'm going way out of order, but yeah. So Airbnb has had a really great comeback on Friday in response to the Merck news and just the overall news about COVID cases dropping. Airbnb, I think, does continue to do well. This is one of the stocks that we said was one that if you had owned $50,000 worth, it could make you a millionaire in 20 years, just off of compounding and how much this is going to continue to roll. This is something that we really like as far as disruptive technology is concerned, and it really is just disrupting the industry when it comes to travel. Yeah. So this is going to continue to roll. I think if we can get it above 175, we could potentially see a nice little breakout at Airbnb. Now, I will say, I caution people from a PE standpoint, this is a little bit dangerous, only because if we do start to see the 10-year yield go up next week, which is possible, we could start to see that make another move. We've seen how stocks that have high multiples and are operating at a loss still do get impacted pretty significantly. So if that ends up happening, that's certainly something to keep an eye on, but we've seen how this has bounced back regardless. And I think that Airbnb is going to continue to make really nice moves.
I've never told you this, but I do have a big concern with Airbnb. Now, let me be clear. I am hella bullish on Airbnb. I'm right there with you. But what I've been realizing just through talking to people and experiences, they're like, the thing with Airbnb is they got to knock it out of the park the first time somebody experiences it. Nobody's going to give them a second chance if it's shitty.
Yeah.
They had a shortage of hosts. and now they're bringing on hosts, and I worry the caliber of the places are not to the level of before because they need hosts so badly.
Yeah.
So that's a storyline I think we need to keep an eye on, because, hey, you got to get hosts, but you don't want it to be some dump. And I'm starting, not overwhelming, but I am starting to hear a couple, like, people were like, oh man, you should have seen the place I stayed at.
Oh, wow.
And so I think what Airbnb is going to have to decide is, like, we may need to just deal with the pent up demand and not just get hosts to get hosts. And that, I think, is going to be the key to them. Can they manage as they scale, still having the level of Airbnb? Because we love being at their places, and I've had really good experiences, fortunately. So that's the one thing to keep an eye on.
Yeah, I don't stay at hotels anymore.
Yeah.
I just don't. So, but yeah, really great point. I didn't even think about that. Hopefully that they're not sacrificing quality for quantity, because that would really be terrible. I mean, that's why people love Airbnbs, because like the hosts are awesome. Obviously, if you're looking at Airbnb, just go with the super host.
Exactly.
You'll be fine.
Airbnb Plus.
Yeah. Okay. So the last one that I have on the watch list this week is Apple. Now, Apple came down and just barely touched a really crucial support, which was a crucial resistance before it broke out to its all-time highs. It came back to retest those levels last week. And I think this is actually going to be something that is worth watching and maybe potentially grabbing the dip on, because it responded negatively when we started to see the 10-year yield go up. Inflation scares and all that stuff. People started to sell that off because I guess maybe it was just tied to tech. The stocks that are really going to be impacted from a PE standpoint or earnings standpoint are going to be the ones that are operating for a loss, the ones that have super high multiples. Apple just isn't. It's actually really undervalued right now based off of from a PE standpoint, and it's actually been underperforming the market as well substantially. And we've been talking about this potential catch-up trade that Apple might be having, and along with some of the other FANGs. I mean, it's mind-blowing to me that we saw Netflix just blow right through all-time highs, and yet Apple still sits here. Amazon still sits here. So we take a look at the chart on Apple, and I think that this is definitely worth considering on a potential dip grab, only because this 138 area was a really tough resistance. If we go all the way back to just last year, when we saw the sell-off on big tech in September, 138 is where it got up to. That was the resistance for it. And then it came back up to try to retest that again in December of 2020. And it's struggled and really kind of been sideways for the most part all the way up until recently. It broke over that 138 area and then went zooming all the way up to 157 all-time highs, and now has retested that 138 spot, Fat Man Zoom. And I think that that's going to be the spot to certainly watch for. It closed at 142, but this looks like a really good opportunity for Apple, especially if this is just a stock that you're accumulating, which we strongly encourage. That's how we feel about Apple. Is just something that, weekdays you're buying into weakness like this. And this just looks great. I think it's a really good opportunity.
Yeah. I actually recently got into it just on this pullback. So I would agree. I got some leaps on that. And I mean, next quarter is going to be really good. The quarter after that, I think, is going to be monstrous. Yeah. Fundamentally, this is looking really good. Even though it's at all-time highs, fundamentals still look very solid and like they have more room to go. So I'm not concerned in the least bit about Apple. I'm so excited about Apple and what's to come for Apple. They're just continuing to dominate.
Yeah, I mean, and obviously they've already expressed some concerns over supply chain issues when it comes to the iPhone 13. The iPhone 13 seems to be in very high demand right now.
Yeah.
So a lot of people are excited about it, but Apple has already come out and said, hey, there might be some problems with, shipping and all that. So there is that side of it that could take this below that 138 level. But man, I think that's certainly a good spot to at least grab a starter on, or, given the fact that it's come all the way from 160 just about to 138, I think it's a good spot to at least start.